What is going on in the stock market right now? What's going on? And how you understanding what is going on is making you money and could make you rich. Sounds simple? It is not, but it is a possibility. It is possible for you to make money in the stock market, obviously, but you need to understand what's involved. You need to understand what to do. So, there are four ways for you to need to understand in order to make money in the stock market. Reason number one, you need, it might sound a bit silly, but you need to understand what luck is about. You need to understand what luck is. Luck is what you don't know. And because you don't know and you don't understand, then you say, well, that's luck. The most successful investor, Jim Simmons, made $40 billion in the stock market by managing a hedge fund. And it wasn't luck that got him there. It was statistics, it was math. So it's not luck. He wasn't lucky. Okay. The thing that you need to understand is that in the past, when we would drop something on the floor, and I say, what is the likelihood that this pen is going to hit the floor? The likelihood is 100%. It's not luck that is flying up. There is a reason why it drops to the floor. I know this sounds silly, but it is important for you to understand so you don't get all mystified and confused as to what is going on in the stock market. You need to understand what is happening, and that's very important to understand that. We're going to take a ride, we're going to take a trip, and we're going to try to understand the four reasons to understand the stock market and in the process to get rich. So the first one is you need to understand that there is technically no such thing as luck. You may not understand what's happening, you may not like it, and you say, I'm lucky, I'm unlucky. No, it is nothing to do. Luck does not exist. Let's take a look at what's going on with NVIDIA right now. What has happened in the past with NVIDIA? Look, the last time they had the earnings, I mean, fantastic earnings, but for some reason, the market did not like it. He did not like it because he was expecting more, or was it he didn't like it because it was expecting more, and also it felt that it was overpriced, or because it was overpriced and there was some concern about inflation and recession and the election. Uh, what went on there? What went on there? This stock was fantastic. What happened here? Right? Earnings were released, and look what happened. We went down, and then after we went down, we start to go back up again with now some incredible new expectation having to do with the stock. Now, earnings were not released, right? Earnings are here and here, nothing in between. We were just driven by what we call expectation. Expectation mixed in with concern or happiness about the election. Of course, with the great fact that in September we had a rate cut, and somehow the perception starts shifting away where we are going higher. And now that we have the earnings release, right, that's coming up, what are we doing in the past, let's say in the past couple of the past give me a break here, the past couple of days? No, don't like it, concern. And to try to understand what is going on here is akin to guessing, is akin to hoping, is akin to praying, literally, because there is no real logic, at least from what you perceived as the information that you have. But there's something going on that you're not privy to, unfortunately. And you probably will never be because it's too complex. And as you could see, as we get closer to the earnings, we were back up again. Now, of course, if you bring it really close, you could see that this morning, the stock hasn't done anything. And as we get closer to the earnings, it gets worse. Okay. So right now we are waiting the earnings released from Nvidia, and let's see what's going to happen. But the story here is quite complex and very volatile. Volatile means I don't understand, means risk, means luck, means I don't understand what's going on. So how do you take advantage of that? Well, and this is kind of point number two. Point number two is that you need to understand that the stock market is like a child. What does that mean? It means that it's very volatile. It means that it is constantly trying to guess, is constantly unhappy, it is constantly unstable, like a child. And trying to please a child is very, very difficult, right? I mean, it's almost impossible because you really don't know what's going to happen, and that's the issue. But for you, you need to understand that it is an issue, but you need to understand what you're dealing with here. You're dealing with a child. You're dealing with a child that, frankly, is quite complicated, right? So let's see what's going on with the news right now.
Pretty much in line with that $37.1 billion. And then, of course, the data center revenue, which includes those chips that we talked.
Look at this. Nvidia third quarter revenue 30 billion versus the estimated of 29 billion.
Talk about each and every day. That came in above estimates at $30.8 billion. Estimate was for $29.1 billion.
Our Cameron Cry is just crossing with a story. NVIDIA guidance will be a Rorschach test for market psychology. And he says in the case of NVIDIA, the recent run-up in the stock suggested a market that was more optimistic than the analysts. And I've been looking and watching NASDAQ 100 futures, E-mini futures in the aftermarket. It's just down about 0.2% because I was just curious about the broader market impact, certainly on the tech trade. And this is at NVIDIA. It's still down 1%, but it was down double that, more than double that, when those earnings first hit, the results hit.
Well, remember, the average analyst estimate was for $37.1 billion. $41 billion was the highest estimate.
So it fell
quite a bit short of that. Yeah, quite a bit of a range. Company guidance coming in at $37.5 billion, plus or minus 2%.
All right, let's get more on the aftermarket and on that trade with NVIDIA and impact across the board. Let's head back to New York City, Bloomberg headquarters in New York, and Charlie Keller.
All right, I thank you very much. Recapping, resetting here. We've got NVIDIA shares after hours now trading lower by 1.1%. As Carol mentioned, have been down substantially more after hours. NVIDIA did deliver a revenue forecast that failed to meet the highest expectations, showing that its dizzying AI-fueled growth run has its limits. NVIDIA also says Blackwell demand will exceed supply for several quarters. After hours again, NVIDIA down now by just about 2%. Reaction to the NVIDIA report from Lynn Duan, Bloomberg's managing editor of technology and global security.
There is no lack or absence of demand for these Blackwell chips. The question becomes, is the rest of the supply chain set up to produce as much as the market needs? And it seems like NVIDIA is acknowledging that that is the problem here.
And again, after hours, we do have shares down by 1.9%. Snowflake, meanwhile, giving a better than expected sales outlook, suggesting its newly launched products are receiving a strong reception.
As you could see, the market was expecting more. I mean, better estimates were here. It got there. They said, but you know what? We want it here. You see what I mean by a child? It's asking for something that it probably will never get. But you know what? Like a child, it's asking for the things right now, but then it's gonna forget. Then it's gonna move on, right? So I wouldn't get too concerned about things like that. So, but understand who you're dealing with. Understand that it is a child. Now, of course, when I say it's a child, and you hear NVIDIA, if you don't follow the stock, you're gonna panic. You're gonna say, "Wow, the company's not doing well because the stock is down." Now, you can't think that way. The way you have to think about it is you have to think, who's saying that it's not working? Who's saying that? The child is saying. So therefore, don't pay attention. That's like in everything else. You need to make sure as a parent that you know what you're supposed to be doing. You need to know the environment that you're in. You need to realize what is going on. That's important. For example, let's take a look at what happened with the Tesla situation, right? The Tesla situation is even more interesting. The economics news, it's not real. What do I mean by it's not real? Look at inflation. Inflation is down. Inflation is down as measured by the CPI. But everybody knows that everything costs more money. What do you think Trump got elected? If people were so happy and there was no inflation, he wouldn't be there. But yet, when you look at the CPI, it's on the way down. I'm not saying it's not going down, but the way they're calculating the CPI, if you were to calculate it the way we did it in 1980, the CPI is not 3.3% in core inflation. It's more like 6 to 7, if not higher. There's a website that tracks these things. And I have a video on that on inflation. Take a look at it, and I show you where it is. It's not real. The data that you're basing, not just you, but the Fed, is not really the real data. It's just data, but it's not the reality on the ground, right? But yet, we're making $1 trillion decision on that. And that is why you need, as an investor, to understand the stock market and to get rich, you need to realize that it's not real. I'm not saying it's fake, right? I mean, it's real data. I mean, they went out and they calculated the CPI, but then they realized, then they make certain adjustments. Remember last couple of months ago when there was an 800,000 payroll data adjustments? Oops, we have a lot less creation of than we thought. 800,000. So meanwhile, we're just trading on that information, and it wasn't real. You have to understand that most of this stuff are surveys until you get to the actual numbers. But by that time has passed by. So you need to realize that point number 3, that it's not real. So if it's not real, I mean, the money that you win or lose is real. I mean, but if the data itself is not real, then what do you do? But you have to do something. You can't just sit with your money doing nothing. No, this is not the point. By the way, don't forget to subscribe and like this video. That's not the point. The point, you still need to invest. You still need to make money. But because it's not real, it's okay. It's like, it's like a fable, right? It's like a fable. It's like a story you tell children. But as long as you know that it's a story, and as long as you know what happens in the end, then it's okay, because you could tell how the story is going to end. And that's my number 4, the story. What do I mean by the story? Well, because the market is a child, and because you need to tell a story, you, my friends, need to understand what is a story being told. If you look at the market, sometime in July, the story was A, inflation, B, recession, C, what is the Fed going to do, D, is Trump going to win? Who's going to win the election? So you have all these stories. Now, the point is, which one should you be focusing on? And that, my friends, that is where you get paid the big bucks, to find out exactly what is going on in the market, what is driving it. I mean, come on. Look what's going on with the NVIDIA right now. The company is not filing for bankruptcy. The company didn't do as great as we thought it would do. And what do you think is going to happen to them? It's going to go down and down and down, down, down until when? Until a news story picks up, right? Because right now the background story is, well, you know what? Because on Monday we came to work on Monday, and what happened? World War III. News story. Now, one thing you have to realize also when it comes to a story, you don't want someone to throw the book at you, i.e., you want to make sure that you know if there's a black swan running around your neighborhood. A black swan is basically an event that is quite frankly something that no one has seen or heard, and it surprises everyone. In August, it was the Japanese trade, right? The thing that happened in Japan, where essentially everyone was shocked that there was the carry trade, right? So that was a, and then now on Friday the market was shocked when the Fed said, it might not be, although this was not real black swan, this was him talking. On Monday, World War III, that's a black swan, but the market realized, nah, it's not such a black swan after all, because you know what? There's not going to be World War III. Putin is not going to actually launch nuclear weapons. His country is not threatened. He just get better weapons against it. I mean, if somebody starts bombing Moscow, then maybe he's going to use the atomic bomb. Right now, it's just rhetoric, right? Because he also knows that once he starts using that weapon, good luck. Make sure there's no wind when you're blowing this thing in the air, because you're going to get it more. And in the U.S., quite frankly, we're safe. So that makes even us more valuable. So that is why it is important to understand those 4 points. One, understand that this has nothing to do with luck, because once you understand it has nothing to do with luck, you get emotionally, mentally, you don't feel bad that you missed it, because you just didn't know what was going on. It's not like somebody doesn't like you. It's not like somebody doesn't like you up there. It just means that it means that you didn't look at what's really happening, right? So it's not luck. The second thing is you need to understand that the market is very emotional all the time. It reacts. So if you have trades, I mean, depending if you're long term or if you're short term, right? It depends where you invested. Right now, if you're long term, I wouldn't worry about anything. If you're short term, like I am on some of the options, well, yes, I'm worried because I'm underwater on that QQQ trade, and I need the market to recover quickly. I mean, before February. But playing a little bit with fire here, but that's okay because some of the return that I've had doing this. Let me show you a little bit some self promotion here. But take a look at my Patreon of the election, the day of the election, right? So, I mean, we're talking 46,000% and annualized and 5,000% annualized. When you've got these type of trades, 1,600% on QQQ annualized, 8,400, 6,300. These are huge gain on some option calls, right? But am I getting paid for the risk? What do you want to make? Do you want to annualize 6,800%? Or do you want to annualize 20%? What is the risk? What is the risk that you're taking? What is the risk? What is going on with the situation? So that's what's important. That is why you need to understand the risk reward. That's very important in the stock market. That's how you make money in the stock market. You don't make money in the stock market by listening to someone else telling you, well, buy Nvidia or buy this stock. And no, because you don't know what they have, you don't understand what they have. But most importantly, I will tell you that security analysis is nothing to do with finance per se, or at least calculations or computations, right? Or very complex items. No, it has to do with the story. Look it up. Look at the dean of valuation. Let's see what he says about call him the dean of valuation and storytelling. I think he went to Google and gave a talk about that. And he, for example, something very simple. Let me ask you a question. Hold on a second. Let me ask you a question. What is the story about Moby Dick by Alan Melville? Right? It's about a whale. No, it's not about a whale. No, there's a whale throughout that movie. It's not about a whale. It's about what? Moby Dick is about the white whale. It's about looking for what you cannot find, looking for that thing that's going to bring you down. That is what the story about. What is Frankenstein about? Frankenstein is not about a monster running around. We don't make 20 movies about a monster. We made 20 movies about Frankenstein because it's about parenthood, because it's about having a child. That's why the movie is important. It's the same thing with the stock market. You need to figure out what is going on, and of course they make it very difficult for you. Do you know why? Because they don't what you're looking at is not real. The market is like a child. It's running around very emotional all the time. Look what's happening right now. Because right now, but what you need to worry about always is the black swan. And what makes it very worrisome about the black swan is that you don't see it until it's there. Look at Taleb Nassim, the black swan. When this black swan comes, it's an event that we think about COVID. No one saw it coming. That's a black swan. But how'd you protect yourself against something that you don't see? You have to protect the portfolio. Protect the portfolio. Don't be so keen and looking for the next Nvidia. Are you protected? Are you protected in case in 6 months from now we start talking national debt and we realize we can't do anything about a national debt? That is how you make money in the stock market. You make money in the stock market first understanding the concept, understanding it's a child, understanding there is no such thing as luck, understanding that whatever you're seeing is not real, and also understanding what is the story being told to you and if it's a right story or not. But always worry about the black swan, the thing that no one is talking about because they don't know it yet. And the market hates it. Why? Let me prove to you that the market is like a child. You put a child in a room and you smack that door real loud, the child will wake up and cry because what's going on? That's exactly the same thing. That is what I'm talking about. That the market is like a child. It hates surprises. It wants to know what's going on, and it hates what it doesn't know, which is uncertainty.